Hello, everyone, and thank you for joining us on LinkedIn Live here. My name is John O. Blackmore. I'm with AmCham, and we are thrilled to be joined by Irene Mock from the HKMC, both Joe Yu and Natalie Choy from HSBC, as well as Chelsea Perino, who will be moderating from the Executive Center. There are over 340,000 small businesses here in Hong Kong. After a couple tough years, businesses need support to help expand as things return back to normal, and that's what we're trying to do here at the American Chamber of Commerce. We're trying to provide relevant programming that'll be useful for small businesses, and provide networking events so that they are able to grow their businesses. So please do consider joining us. With that, I'll go ahead and throw it over to Chelsea.
Thank you so much, Jono. Hi, my name is Chelsea Perino. I'm Managing Director of Global Marketing and Communications at the Executive Center. And I too am thrilled to be here today to talk about a really important programming, which is the SME Financing Guarantee Scheme. It's a new program that's being developed by Hong Kong's government to help stimulate the economy and help small businesses get back on their feet post-COVID. And we are really lucky to have some subject matter experts with us today to help us get a better understanding of how does this program work, how is it set up, and the different kinds of things that we need to take into consideration as small businesses when we're applying and trying to take advantage of all of the different benefits that this program provides. So without further ado, it's my pleasure to introduce Irene Mock, who is the Vice President of the SME Financing Guarantee Scheme Operations at HKMC Insurance Limited. And we're going to start today's program off with a presentation from Irene, where she's going to take us through the program and explain some of the important details and the foundations about how this program works and who it applies to and how we can take more advantage of that. And after Irene's presentation, she'll be joining us along with Joe Yu and Natalie Choy from HSBC to have a further dynamic discussion that touches on some more of the details about this programming and hopefully answers a lot of the questions that I'm sure you as some of the small businesses owners out there in the audience have. So without further ado, Irene, thank you so much for joining us today. Looking forward to hearing your presentation.
Thank you very much. Hi, this is Irene from the Hong Kong Mortgage Corporation, as well as the HKMC Insurance Limited. I wish I could give you an overview of the SME financing guarantee schemes so that you know the role played by banks as well as the HKMC Insurance Limited, as well as the eligibility under the scheme. Shall we go into the next slide? Yeah, this slide gives you an overview of what it is like visually showing you how the SME financing guarantee scheme become a bridge between the SME as well as the banks. As everyone knows, it's very difficult for SME in general to obtain bank financing. Through the scheme, the government provide a guarantee to the banks so that the bank has more confidence and can calculate the credit risk involved in lending to SMEs. The next slide. Next, please. Yes. I will give you a bit of history about the SME financing guarantee scheme. Basically, it launched in 1st Jan 2011. During that time, the special loan guarantee scheme launched by the Hong Kong government during the financial tsunami was about to expire in Jan 2011. And the business community, as well as some government organization, asked the HMC whether we can do a feasibility study to launch something like a guarantee, a loan guarantee scheme for the SME. At that time, we did a feasibility study and we considered that it is a meaningful project to launch such a guarantee scheme to provide a commercial-based financing guarantee solution for the SME. That's why we launched the SME financing guarantee scheme, in short we call SFGS, in Jan 2011 to dovetail the expiry of the government's special loan guarantee scheme. If you can recall, in May 2012, that was against the backdrop of the European sovereign debt crisis, And the government asked the HKMC to launch a special concessionary measures to provide 80%, a much higher guarantee coverage at a much lower guarantee fee for the SME to obtain financing from the banks. And since then, we launched the 80% guarantee product. And the guarantee product enhanced many times. And the latest enhancement was launched in May last year and March this year. And the maximum loan amount is now enhanced to 18 million for a guarantee period of 7 years, as well as the application period until end March next year. This is the 80% guarantee product. And we can see the 90% guarantee product on the next slide. Yeah. In December 2019, the government also announced the proposal to launch a 90% guarantee product. And at that time, the product aims to provide additional support to smaller enterprises, as well as businesses with relatively less operating experience. The guarantee product was well received by the market, and it enhanced a few times, and the latest maximum loan amount is 8 million for a guarantee period of 5 years. And the guarantee fee rate is similar to the 80% guarantee product. If you can imagine your mobile phone package, the guarantee fee is lower than your at a fee rate of a lower amount than the normal mobile phone package. It's around like 2,000 to 2,000 something per annum for a loan amount of 1 million. The application period is also end on the same day, end June 2022. Let me give you an overview of what has been enhanced recently. On the next slide, please. Okay. In the second half of 2019, at that time, the economic environment in Hong Kong is also facing a lot of challenges. And the government launched a principal moratorium arrangement under the 80 and 90% guarantee product. And the principal moratorium was also extended 2 times. And the latest is for 18 months moratorium period in aggregate. And during the principal moratorium, the enterprise is only need to pay interest with the principal repayment deferred. The application period for the principal moratorium is also up until the end of this year. And the next slide is about the interest subsidy arrangement. This arrangement was also launched in mid last year. Each eligible enterprise is entitled to a interest subsidy period of 1 year. During the interest subsidy period, the government will subsidize the interest rate up to a cap of 3% per annum. So the government will subsidize the interest between the loan interest rate and 2.75% per annum, subject to a cap of 3% per annum. Okay, next slide is the 100% guarantee product. Basically, this is a pandemic measure launched by the Hong Kong government in April last year. And this special 100% guarantee product is different from the normal 80% and 90% guarantee product. For a normal 80 and 90% guarantee product, the banks will, based on its normal credit policies, to consider each loan application backed up by the government guarantee up to 80 or 90%. And this 100% guarantee product, because of the pandemic, the bank will not consider the loan application according to its usual credit policies. Each loan application is considered based on the criteria set out by the government under this special 100% guarantee product. Basically, the purpose of the scheme is to lessen the burden of each SME in paying employee wages and rent for up to 18 months in total. Each eligible enterprise is required to substantiate that it has its business turnover has dropped by 30% or more during the specified period. Next slide, please. Under the 100% guarantee product, it was also enhanced 2 times, one in September last year and the other one in March this year. And up to now, the maximum loan amount is 18 months, the total amount of wages and rent, subject to a maximum of 6 million. And the repayment period is 8 years. And again, there's also a principal moratorium arrangement of up to 18 months in aggregate. And the repayment period is, an application period is until the end of this year. The next few slides give you an overview of all the 3 guarantee products together. The next slide, please. Yeah, basically, long-listed company which has a business registration in Hong Kong are eligible under the 3 guarantee products. For the 100% guarantee product, the eligible enterprise has to substantiate that its business turnover has dropped by 30% or more during the period since February last year, compared with the period from January 2019 to June 2020. There's no business operating history requirement under the 90% guarantee product. But for the 100% guarantee product, each eligible enterprise has to have at least 3 months business operating experience up to the end of June 2020. Next slide, please. Okay. Regarding the maximum guarantee period or the repayment period, for the 80% guarantee product is 7 years at maximum. The 90% is 5 years, and the 100% guarantee product is 8 years. And I've already mentioned the maximum facility amount. It basically the maximum amount granted by a bank to the SME as well as its business related entities. The maximum for 80% is 18 million, 90% is 8 million, as well as 6 million under the 100% guarantee products. And next slide, please. For the 100% guarantee product, since it's a pandemic measure, the interest rate is floating rate at a very low interest rate. It's basically the HKMC's prime lending rate, which is 5.25 minus 2.5% per annum. That means it's currently 2.75% per annum. For the 80 and 90% guarantee product, we have an interest rate cap imposed on loans granted under these 2 guarantee schemes. The 80% is 10% per annum, whereas the 90% is 8% per annum for business enterprise, more than 3 years operating experience, while it is 10% per annum for business operating history of 3 years or less. So I mentioned about the guarantee fee rate for 80% and 90% guarantee product, but for 100% guarantee, there is no guarantee fee rate, which is mentioned on the next slide. There's only one requirement required. The commitment of the major shareholders is the personal guarantee requirement. For all 3 schemes, for all 3 guarantee products, we require the major shareholders with 50% or more shareholdings to act as a personal guarantor to provide personal guarantee for the loan obligation under the scheme. The next slide will give you an overview of what are the applications that we have already approved and approved loan amount. Some of you are more interested about the 100% guarantee product, which is the pandemic measure now. We so far since last year, since April last year, it's about 1 year time. We have already granted more than 31,000 applications, and loan amount involved was more than 50 billion, benefiting more than like 23,000 enterprises. I wish this will give you a good overview of the SFGS and the eligibility criteria. If you want to have more like a question about this, yeah, I will answer more questions later. Thank you.
Great. Thank you, Irene, so much. That was so interesting and a great introduction to this really innovative new program that sounds like it's going to be delivering quite a lot of support to SMEs. So I think you did an incredible job of sort of setting the stage and giving us an overview of what this program could look like. But it sounds like there are quite a lot of intricacies and can be a little bit confusing, which is why I'm really excited to invite Joe Yu and Natalie Choy from HSBC to join us here on stage at InvestHK, along with Irene, to talk a little bit further about some of the details and intricacies. For the audience out there, if you have questions as we're going through, please feel free to type them into the chat. We're monitoring those, and I'll try and filter them into the conversation as we are going forward. So thank you guys so much for joining us today. And thanks, Irene, for sticking around virtually. So first off, you mentioned that there's up to $8 million worth of loan opportunities for SMEs across Hong Kong. And I'm curious, what are some of the key factors that these businesses and entrepreneurs should be considering when a bank reviews this SFGS facility application? What are some of the things that they should be thinking about when they're putting their application together?
Good afternoon. First of all, I would like to say thank you to Invest Hong Kong and American Chamber for the invitation to the event today and the opportunity to share on SFGS. And thank you, Chelsea, for facilitating the discussion today. And the question just now about the key factors a bank will consider when reviewing a SFGS application. In considering a SFGS application, first of all, of course, we need to ensure that the application to meet the scheme eligibility criteria. Irene has just made a very comprehensive sharing on the eligibility criteria. Therefore, I'm not going to repeat that. To start with, actually, we will learn about the business nature of your company, whether, for example, you are a manufacturer, a retailer, or a trader. We will also want to know about the revenue source of your business. What is your cost structure? Who are your major suppliers? Who are your major buyers? And what are your payment terms with these business counterparties? We will also like to know about your business plan. The purpose of all these questions is to understand the financing need of your company. And based on that, we will accordingly recommend the best financing solution to meet the unique requirement of the company. And the next consideration is about the repayment source. Naturally, the bank and the company would expect a repayment source from your normal business operation. We never wish to get repayment from Hong Kong MC. Irene is already very busy, so you don't want to make a claim to her. So the source should be from your normal business operation. If I take a trading company as an example, normally a trading company would require working capital to support the procurement of stock from your suppliers. And you keep stock, and also you need to support your trade receivable from the buyers. So, so the repayment source, we need to understand the track record of your business operation, how well you sell off your stock and collect the money from your buyers. And that's why we will have a conversation with you about the market demand for your product, your inventory management, and who are your buyers, and whether they have been paying you on time, whether your sales are made to a single buyer or you are making sales to a diversified portfolio of buyers. And the conversation will enable the bank to understand the track record of your business operation. Apart from that, the financial information of your company can also reflect the track record of all these operations and whether you can successfully convert your inventory, sell them at above cost, and collect money from the buyers. So based on all these factors, the bank will form an opinion on the amount of financing a company may take. At the end of the day, we wish every business can repay the debt and get more financing to expand their business. So we want to give our client kind of a sense of comfort or peace of mind that your company can meet the financial obligation when you are pursuing the business ambition.
Super, thank you so much. Natalie, Irene, did you have anything to add to that?
Yeah, nothing more.
Super. So I think that was,
Yeah.
thank you so much. Sorry. I think that was a really, thank you,
It's okay.
comprehensive response. And we have a couple of questions from the audience. So the factors that you were just talking about now seem to be very much related to the business operations, the kind of industry that you're in and what your product pipeline and your performance pipeline is. But there are a couple of questions from the audience that are specifically talking about the relationship between the company and the personal guarantee. So Irene mentioned in her presentation that in order to apply for this, you need to put together a personal guarantee as well. But as this is related to a company, some people are wondering, why do you have to put in a personal guarantee in order to move forward with this?
Okay, thanks for the questions. So personal guarantee is a mandatory requirement from HKMC for the SFGS applications. So in general speaking, a person or a group of persons who directly or indirectly holds 50% or more of the issued capital are required to provide personal guarantee in favor of the bank, the lender, to support the relevant facilities. So from the bank's perspective, the personal net worth of the guarantor is also one of the consideration on the credit assessment.
Super, thank you so much. I think that hopefully answered some of the questions from the audience. So moving on to talk a little bit about this idea of facility. How would banks suggest the different types of facilities according to a company's financial needs? So what are some of the things that you guys take into consideration?
Okay, as you may know, bank can provide wide range of lending products to different types of companies. For example, the import-export trade lines, revolving loan, overdraft, and term loans. So to propose a suitable facility, as Joe mentioned, we may first understand the business model and also the trade cycle of the company. Let's give an example for a trading firm again. So if the payment terms with suppliers are on a COD basis, cash on delivery, so that our import invoice financing loan can help to disperse the funds to suppliers before the trade come to the point of sales. So on the other hand, for export side, if the payment terms to buyer is on open account basis, so the export invoice financing loan, for example, factoring, can also help to maintain the cash flow of the company before the buyer payment can be received. Besides, for the operating expenses like a payroll, rental fee, logistic fee, etc., these can be supported by the revolving loan or the overdraft limit. So after all, we have to have a full of understanding on the business model of the company in order that we can tailor-make a suitable facility to cater the funding need.
Super. So what kind of information does a bank usually require to support the SFGS facility application? And maybe you can go into a little bit more detail about this personal guarantee, because I think people are a little bit confused about why it's required if the loan is for a company. So maybe you can dig into that a little bit more.
Okay, first of all, let me explain the document first. The document that the bank require is generally who can address our credit assessment as mentioned earlier. So first of all, we will obtain the audited report and the latest financial in-house account from the company to assess their financial health and repayment ability. So secondly, we will need to understand business model of the company. So information like business nature, product or service that involved, information about buyers and suppliers, as well as some document like sales contract, logistic, the transport documents, and also the invoice are also necessary. So it's also great for us to have the strategic business plan for us to have a better overview on the business outlook. So to echo your questions about personal guarantee, because the personal net worth of the guarantor is also one of the crucial or vital decision for us to see whether the health of the company is sustainable. And so also the availability of collateral is also can provide extra comfort for the application. So the personal guarantee is necessary. Besides, it is mandatory from HKMCI. So last but not least, it depends if the company maintains multiple banks. If there are multiple banks, it's great for us to have other banks' facility letter, other banks' statements for us to review the credit history and also the account conduct. So it is case by case, subject to the complexity of the case.
What if a company has multiple shareholders? So there are more than one person that holds a stake in this business. Is there a way for them to sort of combine their resources and have a combined kind of personal guarantee, or does it have to come from one shareholder?
Yes, joint and several guarantee is what you mentioned about the combined personal guarantee. So it is also to meet the requirement from HKMCI. So generally speaking, a person who, a group of person who in total own more than 50% of the issued capital is required to provide a personal guarantee to support the relevant facilities.
Thank you so much. Irene, Joe, anything else that you'd like to add on top of that? No? Okay, cool. So we've been talking a lot about industries, but I'd love to know if there are any specific industries or business sectors that are being prioritized or preferred for the schema, or is it kind of equal opportunity, regardless of what industry these businesses are coming from?
Well, I cannot speak for all banks in Hong Kong. As to HSBC, we have been serving the local community for over 150 years. And in fact, our client base covers virtually almost all industries and sectors in Hong Kong. On one hand, we continuously support the traditional industries such as trading, manufacturing, retailing, and professional service providers who remain the pillars of the Hong Kong economy. Although their business may be temporarily interrupted by the pandemic, we stay to support them through tough times and connect them to opportunities when restrictions begin to ease. On the other hand, we believe time of crisis often bring about innovation. We have seen many companies capture great opportunities from the new economy, such as IT, application, online marketing, and e-commerce. We stay humble to learn from them, and we want to evolve with our clients, and we look forward to working with all these new economy companies to capture the opportunity in the new era of technology. And so in short, we support all walks of life. And we welcome any company to come to us and speak with us and start a mutually beneficial banking relationship as long as it is legal and ethical.
Super. So it sounds like there's an open opportunity for lots of different kinds of business out there. That's great to hear. So I'm seeing questions. I'm doing my best to pull the questions from the audience, but if you have more, please continue to type them into the chat. But to move on, so to talk a little bit about the bank calculation and how do you guys determine how much businesses get? There was the mention of this 8 million per business, that's sort of like the cap, but obviously there's probably a range within that. So can you maybe explain a little bit more about how that amount is calculated?
Right. Basically, there are two major considerations. One is the requirement of the company, and the second is the repayment source. As a responsible lender, we don't want to overlend, so we will only lend up to the requirement of the business. And we also want to make sure that we lend to an amount that the company can repay. So on the requirement, if I take the trading company as an example again, normally the requirement would be for the working capital for debtor and receivable. So we will draw reference to a reasonable value of receivable and inventory of the company, and we will lend up to that value. As an example, let's say if a manufacturer want to acquire some equipment to expand the production capacity, we will lend up to the value of the equipment. And as to tenor, in determining the tenor for the working capital facility, it will cover the normal trade cycle of the company, i.e., how much does it take between paying to suppliers and receiving from buyers. So that will make sure that the facility will cover the funding gap of a business. As to equipment finance or capital expenditure finance, normally it will cover the normal capital investment period as well as the payback period, and it may last for a few years, subject to the maximum cap of the scheme. So all in all, the second factor is about the repayment source. So as I said, we want our client to enjoy the peace of mind or the sense of comfort that the business can meet all financial obligations. So by the conversation about the business operation and the review of the financial information, we will form an opinion and codify the repayment source, and we will lend up to the amount that the company can repay. And also the repayment tenor will consider the cash generation and to make sure that the tenor are properly structured to match with the cash flow generation of the company.
Thank you so much. Irene, I actually have a question for you. So obviously, as we're talking about, the types of things that people can use these loans for, and obviously the different ways that the amounts are calculated, there are obviously a lot of different factors that go into this. And I know one of them is the idea of this MPF payment, and you have employees, and how much are you putting into MPFs? So one of the questions I have is, what if employees from my company, I'm applying for this loan, are contract workers, or my staff selected they don't have MPFs because they have other retirement accounts? Does that affect my ability to apply for this loan?
Okay. Basically, we won't comment on individual circumstances of a company, whether an employee is required to pay or the employer is required to pay MPF for individual employee or things like that. With regard to the scheme, we do not need to consider the MPF payment. We basically consider how much wages the enterprise pay for each employee. So basically, for example, if there's 10 contract workers employed by a company, so we count how much the company pay for these 10 employees per month, and then times the number of months. For example, this scheme now, we can lend up to 18 months, times 18 months, the total amount of wages per month, and together with the rent, and both amount together, it will be kept by like 6 million. So I don't think MPF payment will be considered in the scheme to calculate the wages. Yeah.
Thank you. What about if these businesses are working in a, quote, non-traditional type of space? So the executive center, obviously, we're a shared workspace, and a lot of businesses are moving towards a more flexible model, especially with what's happening with COVID now. So is that going to impact the way that this scheme applies to them if they have perhaps a different kind of lease structure, or employees are working remotely?
It won't affect because we understand that nowadays many people, like designers or consultancy, they won't own the whole business premises or office in order to reduce the rental payment. For shared office spaces arrangement, basically the enterprise needs to provide proof about the arrangement between the enterprise and the landlord or the sublessor. We need the rental receipts, proof of the rental payments through the bank statement, as well as any contractual arrangement between the landlord and the enterprise would be helpful to for the banks, as well as to calculate how much rental payment per month, and also times 18 months to calculate how much loan amount is eligible under the scheme.
Thank you so much. So talking a little bit about flexibility, I'd like to come back to our guests from HSBC. Obviously, if we apply for this loan and say I'm a small business and I get I'm lucky enough to get some money from HSBC to help me get my business back on its feet. What kind of flexibility is there of the drawdown and repayment terms? What kind of flexibility can HSBC offer, and what things are you guys doing to create a better environment and better service for the people that are applying for these loans?
Thank you for the question. And actually, we customize our lending solution to meet the financing requirement of the company. If we take the working capital facility, for example, the facility will be available on a revolving basis. That means once the trade loan has been repaid, withdrawing this can be available to facilitate the company to start a new run of trade cycle to do the procurement, stock, sales, and receivable again. And at the same time, for certain capital expenditure financing, we offer partial drawdown to match with the payment schedule of the expenditure. And specifically for SFGS, 18 months principal moratorium is allowable. So all this flexibility can actually facilitate the business to suit their own business plan. These are only a few examples. And actually we study individual circumstances, and we will make sure that our facility structure will meet the unique requirement of the company, and at the same time provide a high degree of friendliness to our clients.
So you mentioned this idea of principal moratorium, and that is eligible for FSGS, right? So maybe Natalie, you could explain a little bit about how somebody would apply for that.
Yes, the SFGS loan is eligible for the pre-approved principal payment holiday scheme we called PPPHS, which is launched by HKMA since last year, May. So this scheme has been further extended for 6 months to October 2021 to alleviate the company's financial burden during this critical time. So for the eligibility criteria, you may refer to the public web of HKMA. Generally speaking, for the principal payment of loans for eligible customers with the due date falling between May to October 2021 will be deferred by 6 months, except for the trade loans, which will be deferred by 90 days. Besides, if the loan has been extended for 540 days or more since the first drawdown, the eligibility will subject to the bank's prudent risk management principle. So customer may wish to understand from their own lending banks on the eligibility criteria, opt-in arrangement, and also the in-scope facilities.
That's super interesting. So you guys are obviously speaking from HSBC's perspective, and we have Irene here from HKMC. Is the criteria that we're talking about here, is it universal, or are there specific criteria that's relevant just to HSBC versus criteria that's relevant just for HKMCI? Would love to know a little bit more about that.
Well, from a general consideration of SME lending, I think all licensed banks in Hong Kong observe the banking audience as well as other laws and order of the Hong Kong SAR. We are also subject to the regulatory guidance of the Hong Kong Monetary Authority. However, within the legal and regulatory framework, each bank will have their own credit policy. Therefore, the process and the decision may vary from bank to bank. And some banks may have their own specific policy on SFGS. And that's why you will see in the market, some banks are more active in offering SFGS than the others. And of course, the eligibility criteria of the scheme is something that we must observe. So that means that is universal and applicable to all the participating banks.
Irene, could you share your thoughts on this question as well?
Joe is very precise, speak very precisely about the practices of banks in considering SME financing. We are the same. Basically, bank will consider individual circumstances of each enterprise, including the business model, repayment ability, credit history, etc. And the banks will consider, after considering all these circumstances and the repayment ability of individual enterprises, they will consider whether an 80% guarantee product or 90% guarantee is more suitable for the enterprise. And the eligibility criteria under the SME financing guarantee scheme is consistent across all banks.
That's great to hear. So it sounds like irregardless of where you're banking, you probably have some type of opportunity to take advantage of this if you're a small business, which is great to hear because I know a lot of us are really excited about getting back on our feet. We're almost out of time, so I'd like to wrap this session up with one last question, which is if for some reason the first time I apply for this loan, I'm not accepted into the program, is that going to affect a future application, or are there ways that I can go back and revise my application to make sure that I am actually accepted and I do get to take advantage of this program?
Yeah, definitely not. It won't affect the future loan applications. So as long as each application, the bank will review case by case, subject to the availability of updated financial report and also the business status.
Super. Well, thank you all so much. Thank you, panelists, for joining us. And Irene, thank you for all of your insights that you shared. I hope that this is at least an introduction to this program that people can use to do further research. We'll actually be putting a QR code on the screen at the end, which you can screenshot or scan, and that will give you some more information and some contacts that you can reach out to if you have more questions. But in further, I would like to introduce KC Lam from InvestHK to give our closing statements.
Thank you, Chelsea. Thank you to our HSBC friends, and thank you to AmCham for all your wonderful insights. Thank you also to Irene and her team at HKMC, who, despite the incredibly busy schedule, have managed to squeeze this session for us. So we're very, very grateful for that. I think all of us have learned an incredible amount regarding the SME financing guarantee scheme. We honestly believe that this will make a difference for many, many small and medium-sized enterprises as they make their way through this pandemic, and hopefully tomorrow will be an even better day with this kind of scheme. The enhancement to 100%, I think, will make a difference. As Chelsea mentioned, I hope you guys have got your mobile phones ready. We are about to put up a QR code around here, I think. Yeah, around here. And please scan that or screen cap it or zap it and save it, because what we're going to do is we're going to have a goodies bag after this. On that, please register your name, your contact details, and we'll send you the presentations that we saw this afternoon, along with the Q&As and a bunch of goodies. So we'll also leave the contact details of our friends from HSBC, Joe and Natalie there, and you'll be able to give your questions to them directly. We heard from the chat, from the comments, that yes, there has been some difficulties and frustrations. We hope that this session will be able to at least put some of those frustrations to rest. Of course, then, answering one question will lead to another. Hopefully, this will eventually unlock and release those funds from those banks. So with that, thank you very much again. We at Invest Hong Kong, as you know, are always more than happy to welcome you here. And until next time, goodbye. Thank you.